All right. Welcome to the Big Skinny with me, Lou Basenese, coming to you live from probably one of the most unexpected places in the world, Nicaragua. But you'll find out why it's relevant before too long. If you're just joining us for the first time, the Big Skinny is all about all filling, zero fluff, and nothing else. Some people call us the Sports Center of financial news because we just get to the highlights that matter and make you money. And I'm excited for this episode, even though we're far, far away from our home and frigid cold in New York City. Sorry, babe, left you for the sun and sunsets here in Nicaragua. We're going to cover with one of my longtime friends from the industry, investment world, one of the top analysts that I've ever been around, especially for detecting trends early, getting subscribers involved, Matt McCall from Nxt Wave Research. We've got crypto and meme coins to talk about, Bitcoin, biotech, rebounds, maybe some critical minerals, maybe the next wave of plays in AI. Matt is going to cover all that and more with us, some names we share in common, and then more importantly, some stock picks that you've never heard before, at least not from us here. Along the way, we're going to share just nothing but hard-biting insights for you, but we want you to be a participant. This is a Choose Your Own Adventure live stream, so join the conversation. We are live. In fact, last week, people kept chiming in. Are we live? Is this really live? I don't even know what that means. So if someone could chime in the chat what translation is, let's see. Thank you for saying hi from far away. But listen, we want questions along the way. Challenge us. Take us to task on some opinions, some stocks we share. Are we bullish and we should be bearish? Let us know. We're not afraid to take the tough criticisms and answer the tough criticisms on air. LFG, let's go. We got a whole show to run you through and more, a lot of insights to share. Don't be shy. But before we get to this week's rundown, just want to make sure that you know to follow us every week on X or YouTube so that you don't ever miss an episode. And with that being said, let's get to this week's rundown. All right, for the newbies in the bunch, our rundown is where we share one headline that you should usually ignore, one really key chart that has the data that you should be paying attention to, and then most importantly, one investment insight, one action to take to make sure that you can make some money from the insights that we're sharing. And in this week's rundown, do we have a Bitcoin bottom? What's these money talks? And when in doubt, what should you do? So let's start with the headline that really isn't that misleading this week, coming to us from none other than the folks at Bloomberg, who we kind of pan sometimes, but I think they got it right. Bitcoin's break below 80,000 signals a new crisis in confidence. And I think that's right. One of the questions that I'm always asked when I'm making appearances is AI a bubble? The next one that I've been asked most recently is, why isn't Bitcoin rallying right alongside gold? And I think this is the answer right here. It's a crisis of confidence. This was supposed to be the digital gold, the way to protect against dollar debasement, the way to get away from traditional assets, but not have to hold the physical assets in gold. But lo and behold, no pun intended, gold's been outperforming. So what does that mean? What's ahead? Is this a crypto crash that's going to continue to go down? Let's dive in and see what the data says and see what some smart minds are saying about this. Where could we go from here? Well, take Alex Kupsalekovich, chief market analyst from FX Pro, and I thought I had a hard last name, but he's spot on here. Suddenly, cryptocurrencies no longer appear to be the alternative, right? They're not a hedge against not so responsible financial policies of major countries. They're collapsing. You're seeing institutions that were key buyers of the cryptocurrencies back out. If we look at fund flows in major ETFs, the Bitcoin ETFs, they're going the wrong direction. We've seen a net exodus of, I believe, $5 or $6 billion worth of fund flows in Bitcoin ETFs. This is the longest streak of monthly outflows that we've seen. Gosh, it's 3 in a row, right? So if you look at this chart here, we go back to the beginning of 2025, we saw 2 months of outflows, really precipitous in January. But before that, really just a trickle of outflows in just a single month. So what's going on here? Why is the confidence eroding? Well, I'll tell you what, I said this before. I jumped into the Bitcoin game. Remember, we had Anthony Pompliano on in October of last year. I said, all right, well, look, I'm figuring out Bitcoin. I need to start investing. Seasonality was in our favor. If you looked at the seasonal performance of Bitcoin, it was supposed to be up Oktoberfest, and it turned into Nopetoberfest. I mean, if you look traditionally, Bitcoin's done really well and started a 2-month rally in October, averaging 20% gains in October and over 40% in November. And we haven't had that. In fact, we had massive liquidations in crypto in October that triggered the first sell-off in the waves, and now we're coming down even further. January was a negative month. So what's ahead? I think what's interesting, perspective, right? And that's what we're here for, to give you perspective. You see the seasonality is in our favor. As we get into the beginning of the year, Bitcoin is largely positive in most months. But what about how low can we go, right? How far does Bitcoin normally sell off when it gets into these massive drawdowns? Every asset goes through these. We deal with it in cycles of biotech and in small caps and in large caps and individual stocks. Well, I hate to be the bearer of bad news, but it could get worse from here, right? Bitcoin could pull back another 50, 60% from current prices to match drawdowns you saw back in the 2018, 2019 pre-COVID crisis. Bitcoin pulled back very dramatically, over 80%. And then we get into the post-COVID sell-off, the boom then bust. And we were, again, similar area here, about 75 to 80% down. So folks, I'm not going to be one here that can prognosticate. I'm not the Tom Lee who was on CNBC today saying the bottom is in Bitcoin and Ethereum, coming from a man that's lost about $6 billion on paper in his investments in Ethereum. I'm not going to be so bold. I don't know where the bottom is. I'm just sharing this to say the bottom could be lower from here. But I do think you've got a lot of people that are interested in Bitcoin that will start getting more captivated by these prices sub 80,000 than they were chasing it at 120,000. So what does that leave us with? What's the investment insight? Well, should we chase after gold because it's performing better? Should we chase after Bitcoin? I mean, if we look at this week's money chart, you see that there's a major crossover, right? Momentum is on gold side. These are the iShares gold ETF versus the iShares Bitcoin ETF, IAU versus the IBIT. You see the assets under management have dramatically moved. And look, you don't fight the Fed and you don't fight momentum and the trend here. I think gold is your friend right now. The momentum is in favor there, but you saw how quickly things have changed. Look at this chart from October to the end of January. We've seen a complete reversal. It can switch just as quickly. So this week's investment insight, the one thing you should be doing is don't make a decision between gold or Bitcoin. Buy both. We've talked about this before. There happens to be an ETF that gives you 100% exposure to gold and 100% exposure to Bitcoin by using leverage. This is the key investment insight. I would say, look, don't try and predict the bottom. Buy the BTGD ETF or even buy options. If you're bearish on both Bitcoin and gold, well, heck, buy some put options on this. But if you're long-term believe the debasement trade is alive and well, then you should be buying BTGD. I own it personally. This is not personal investment advice. It's just general in case you were wondering what might be a good trade to trade the dollar. And look, you got to be honest, right? The debasement trade was the right call. Give it to my fellow Fox colleague, Charles Payne, for indicating that he was dead on. He nailed the debasement trade. He just picked the wrong asset. He went into Bitcoin and neglected gold. Don't make those mistakes. There's an easy way to avoid it. Own both, not either or, and then you don't have to worry about missing out. In terms of missing out, make sure you don't miss out on any episodes here on The Big Skinny. We want you to make sure you're following us on YouTube, where we have aspirations to be the almost next kind of close to Mr. Beast in terms of followers. So please go ahead and scan the QR code on your screen or go to YouTube. If you're watching us there now, hit that subscribe button so you don't miss another episode. We are starting to release, if you're a subscriber, you saw we had a conversation with Phil Rosen, which we'll talk about later on today, more episodes in a week than just our live show. So we're coming at you with fresh insights, all filling zero fluff, whether it's live on Mondays or throughout the rest of the week. And we're going to be coming right back to you with nothing but more of the same after this short break.
Lou Basenese joining me for the moment. All right, Lou. Gold, new high, $5,100 an ounce. Silver, over $100 an ounce. Bitcoin, not reaching new highs. That's not the safety, the safe haven.
Yeah, this is more than a safe haven trade. I'd say it's a debasement trade. You've seen central banks since 2020 print $10 trillion of money. People aren't concerned about volatility. They're concerned about the denominator and how much money's in circulation. If this was about a safe haven, you wouldn't see other assets at record highs. You wouldn't see stocks at all-time highs, both in the U.S. and in the Eurozone. You wouldn't see real estate at all-time highs. Those things would be selling off if this was a flight to safety. This is a bet and a worry about treasuries, not the rest of the market.
Gold's up about 50 or 60% this calendar year.
Yeah, huge catch-up trade. I would say, I've been saying this earlier, it's momentum, right? So we saw money printing going through the financial crisis, and gold really didn't have a huge move during that time, didn't have a huge move during the Biden administration when we had 9.1% inflation. Now you're getting that catch-up in momentum.
Trump's threatening one.
Welcome back to the Big Skinny with Lou Basenese, coming at you live from Nicaragua. And here's the coolest thing, I think. I mean, there's a lifelong friend in the industry, a phenomenal analyst who happens to be in Nicaragua as well. He spends a lot of his time here. So I want to welcome, with a big skinny welcome, to Matt McCall, founder of NextWave Wave Research. Pleasure to have you, my friend.
Pleasure to be here, Lou. Great to see you the other night, and it's amazing how close we are doing this. You know, you can do it from around the world, but we're 100 meters away from each other. It's pretty cool.
No, it's amazing, man. And who would have thought, if you said to someone 10 years ago, you guys are going to be doing a live stream from Nicaragua, adjacent buildings, everyone, like, we don't even have internet here yet. So
exactly.
No, but listen, I think that's been the hallmark of your career. You've always been early and more often than not right about trends. Would love to get your thoughts on some of the biggest trends you're tracking as we kick off 2026. And right out of the gate, I mean, are you a gold bug? Do you think crypto is more interesting, or do you think a whole other asset is better, like critical minerals? Where do you fall down on this crypto crash and the reaction?
A good question. I am personally heavily invested in Bitcoin. I've been since $600 a coin. I've never sold. So I don't plan on selling anytime soon. I actually borrowed against some of it building my house here in Nicaragua. But I'm still very bullish on Bitcoin, but it was a rough weekend, seeing it break support. So I realized that a lot of people are giving up, throwing in the towel, but I'm fine. I still think we hit an all-time high by the end of the year. I think it's just, this is the natural, kind of 35 to 40% pullback you get in Bitcoin. We're right around that average pullback right now. Gold, not a gold bug. I'm probably the opposite. And the gold community tends to think I'm a real ass because I think gold bugs are absolutely out of their mind, because it's like dealing with an extreme leftist or extreme right, somebody extreme right. You can't debate them. There's no, debates. And that's how gold bugs are to me. So I think gold's great to hold it. I listened to you a minute ago, Lou, talking about debasement of currencies. Great argument for gold. It's fine. I just am not a big fan of it.
Yeah, look, I've never been either. I would tell you that, right, the gold bugs have been going to the Vancouver Investment Conference for over 25 years. And I don't think anyone there has ever sold gold. It's a forever hold for them. It's always a buy. Doesn't matter the conditions. So I agree with that. But all right, so what do you make of the surge in rare earths, right? Critical minerals. I mean, are you a player in that space? Do you see that as the next, resource constrained or capacity constrained, supply constrained market where you can scoop up some big wins?
I absolutely love it. We have a bunch of portfolios in all of our newsletters. One of them is based on critical minerals, and we've had that one for several years, and it's been our top performer outside of nuclear energy. It's something that when it comes to metals and mining, gold doesn't excite me. Silver doesn't excite me. These other things do, whether it's one of the rare earths, whether it's antimony, copper is probably my favorite trade this year. It's a simple supply demand. There's a use case for it. There's supply that's not growing, dwindling in some cases, while demand goes through the roof. And it's not just this AI trade. The thing is, the grids were so damn bad prior to this AI boom, with all the data centers. We needed more copper and everything anyway. And then you throw in Trump and you have the reshoring protectionism of the U.S. I mean, it is a perfect setup for a trade. The only thing I will say, Lou, is, a lot of them pull back from the highs. They're not going to go straight up. This is a 10-year play for me. There's going to be massive pullbacks and massive rallies on the way. I'd say buy into the pullbacks.
Yeah. So, I mean, it's interesting. What's your favorite ways to play it, right? Because people hear commodities, copper, silver, gold, antimonium, tungsten. It's like, how the heck do I get exposure? What's your recommendation for people that this is the first time they're treading into these waters? What's the way to ease in? I always say ETFs are the starter, and then you figure out the best pure plays. But how would you recommend that to people?
I'm a stock picker. Back in my career when I managed money, 20 years ago, I was huge in ETFs when they first kind of launched. I built all my portfolios with exchange traded funds. And then over the years, I realized, the more work you put in, for somebody like you and I that can put the work in, stocks are so much better. And so I take what I call like basically a basket approach. So I'll look at the industrial metals and critical minerals and everything, and build maybe 5 to 7 stocks in there, individual stocks that touch all different angles. You're building your own ETF. It doesn't cost anything to buy stocks anymore. Why pay the fee for an ETF? Because what happens, Lou, the ETF might have 35, 40 stocks and 15 are shit. So like, what's the point of owning them? You don't want to own all that. So I like individual stocks for me personally.
Yeah, no, I agree with that. I always is the on ramp to massive gains is the ETF, right? It's the starter drug that gets you addicted to the space, and then you figure out where the purest form of returns are. Not to get down a random tangent, but let's talk robotics and semiconductors.
Sure.
Teradyne. Right before we started the show, I saw you tweeted out to your subscribers they're now doubled their money in Teradyne, which was one of our stocks that we featured in our list of 10 top AI stocks not named NVIDIA. I love it because of the robotics exposure. What is your thoughts on it? Because you've been a long time holder of it.
Yeah, they own Universal Robotics. So for me, it's like the cobots, like the collaborative robots, which, you're going to have humanoids, and I'm a big fan of Tesla and humanoids, but the co-robots are basically what you're going to see first. And the arms that are moving all over. And it's just, this is a trend that you're seeing in Asia, specifically China. US is so far behind. Robots per manufacturing employee, we're way behind China. We're going to catch up. And Teradyne is one that I think we put it in September of 2024. So not that long, but I think we're up 138%. But the lesson about this one, Lou, is crazy. Teradyne was down for us in that portfolio, like over 40% at one point. And you talk about being early. Sometimes you have to weather, like you're down 40% and it hurts. And then you wait a year later and you're up 140. So, I mean, we did take a bit of a hit there earlier, but we didn't sell. And when we're buying into these trends like robotics and automation, it's a 3 to 5 year, if not 7 and 10 year trend that timing's not always perfect. So something like Teradyne to me, even though it's run up this much, I almost considered selling before earnings because I was like, shit, maybe take the gain and run, don't risk an earnings. But I looked at it, and looking at the long term, I mean, it looks great and still a nice valuation here for me.
Yeah, no, I agree. I had a mentor once tell me that early has the same number of letters as wrong, but so does right. So you got to go through the wrong to get to the right sometimes.
Exactly.
So with that in mind, I was early and wrong about small caps and micro caps for a while, calling for a resurgence. I think finally we have the winds at our back. I know you agree. I saw some of your recent writings too. Like, what do you see changing the market dynamic for micro caps and small caps as we head out into 2026? I mean, they're outperforming now finally versus large caps, but does this continue, and why?
Yeah, I mean, I think it does continue. Look at the IWC, which is a Russell microcap ETF. Best performer of all the like small, mid cap, you name it, this year so far, year to date. Look at the chart; it looks great over the last year. Broke out to a new all-time high as of late. So I think the breakout, number one, technical breakout's important to me. Historical, as you mentioned, they've been lagging for so long. And when you have that long of underperformance, it typically just natural reactions, the pendulum, like it swings back the other way.
Yeah.
We do have interest rates, which I think once the new Fed chairman comes in later this year, we will see interest rates be down. I think we're going to have 75 basis points to the downside. That's going to help small caps when it comes to borrowing.
So you think it comes in 3 cuts, or you think it's a jumbo cut and then one more?
I think it's 3 cuts. I think they're going to spread it out. I think a jumbo cut gets the media on Trump saying, you did this, you pulled the strings, where if it's 325, he can kind of take a step back. Shit, he would want 150 basis points today if he could, which he's not getting. But I think there's just a lot of things lining up. And think about this, that you mentioned, kind of the reshoring coming back to America, that helps a lot of small cap companies as well.
Yeah, no, look, they have by and large 100% revenue generation in the US, right? So for the most of them, so much more so than the S&P 500. Any individual names that you really have high conviction at in the smaller microcap space that you can share, or just
yeah, of course. Yeah, of course. We could talk about rare earths. NIO Corp symbol NB is one that I like, and you can see here it's pulled back as of late. That's one I think that has big upside. They have they're working to build a mine in Nebraska. So again, US based rare earth. You love to look at that. Another one I'll throw out there, which it's called Montrose Environment. MEG is a symbol. MEG. Again, it's pulled back from the highs, which I like. This takes care of the PFASs, which is the forever chemicals. It's one of the few companies that can get it out of the ground, the PFASs, and out of the water. And this administration is not pushing it that much, but I think this is something that's so important. I mean, you and I are healthy guys.
Yeah.
You know, we watch what we eat. We do a lot of things. These forever chemicals are horrible for your body. So again, a small cap play, niche player that I think could really do well as well.
Love it. Talk to me. You had in your forecast piece for the year, which I mean, it's awesome. People should check it out. We'll share a QR code how to find your research before the end of this interview. But you talked about European rearmament, or whether you like them or not. Trump really pushed back on the rest of the world and said, "Hey guys, like we're not paying and subsidizing buildups in defense for everyone. You got to start investing more of a percentage of your GDP." So talk to me about that thesis for the European rearmament and like one or two plays that you think are a really smart way to benefit from it.
Yeah, definitely. I mean, it's true. I mean, because the U.S. has basically been subsidizing NATO for forever, really. But now that they've pushed back, and in 2014 they had a NATO summit, and at that point the NATO countries were supposed to have at least 2% of their GDP. You know, we're what, 12 years later now, only 23 to 32 members meet that. Then,
Yeah.
last year or a year and a half ago, whatever it was, they now agreed to, by 2035, 5% of GDP. I mean, that's simple numbers. That's you're looking at hundreds of billions of dollars going into this. I mean, and I have a great chart of the EU military expenditure as percentage of GDP going back to 1960. It used to be around 4%. It fell down, below 1.5%, and now we're about 1.7%. That has to triple to get to the 5% in 9 years.
Yeah.
So,
and so
somebody's going to be making money, right?
How do you think about these? You think it's always going to, so we did an interview on our sister publication called The Upside with one of the oldest drone makers, right? Like, which is now the front leading edge of warfare. But where do you see European, rearmament happening most? Is it just in missiles and tanks, fighter jets? Like, where's the areas that are most efficient, and how do you play?
I think there's probably there's both ways. This is kind of like one of those portfolios where you want to play the old school because you still need ammunition and tanks, etc. But you want to play the innovation side of it, which is drones and things that like a Palantir's even a play on aerospace defense. But as far as the old school, I love Rheinmetall, which is Germany's largest aerospace defense company, and they have been supplying the hell out of the Ukraine-Russia war with tanks and ammunition. I don't see that ending anytime soon. Germany and a lot of these other large European countries, they have to rearm because not only are not spending enough on aerospace defense, they also lost so much by giving it away to Ukraine. So there's a double whammy there. So Rheinmetall's one that I would definitely look at. And when you talk about drones, I mean, there's a lot of great plays out there. RCAT's an interesting one. That is Red Cat Holdings. This is more of the technical side of drones, but military spending would help a company like this, small cap. So you take a very large company and a small cap, put them together. It diversifies your portfolio instantly with two stocks.
Yeah, no, smart, very sound advice. So let's finish up this interview with talking about AI's second act. So I think I said this before, and you've been a contributor on all these mainstream media shows. Like the question I got asked for the last 6 months ad nauseum: is AI a bubble? Is AI a bubble? Is AI a bubble? And you're like, come on, like we're not even. You look at the spending. We'll show a chart later on. Like the Mag 7 companies just keep spending more and more. So when spending and demand is outstripping supply, we're not in a bubble yet, but. You have an interesting thesis on this, right? Like the chips and the suppliers were the first wave. What's the second wave of profits, and how do you play it?
It's a lot of it's adoption of AI into a lot of the sectors that you don't really think about, and more practical uses. And I'm not talking ChatGPT. It's companies that are going to be using it to actually increase productivity. And that's why you're seeing the jobs number not as great, but you're seeing productivity really boom. You're seeing bottom line boom because you're lowering some of the overhead costs. At the same time, you're increasing your productivity. So anything from healthcare and biotech, it's going to be in there, to the robotics and automation we talked about, down to energy, financial services, transportation. You think about robo-taxis, you look at education. So it's kind of the second coming of like software to me. That being said, the SaaS companies have gotten crushed year to date so far. So they've gotten hit. I think you're going to see a real bifurcation of winners and losers when it comes to this. So you really have to be selective in the stocks that will be able to take AI and actually use it for good, for their company, for productivity, not just, Googling funny images you send to your friends.
Yeah, no, I agree completely. I said it, and Satya Nadella at Microsoft said it was about discovery. Now it's about dispersion. This wave is like, how do you actually develop real solutions that solve problems instead of just discovering large language models? I think I remember correctly, you had for cardiac monitoring on your list, iRhythm. So we had a company on before, Heartbeam, that has a 12 lead device, but iRhythm's already scaling much bigger. Why do you like iRhythm? What exactly do they do for the audience that's unfamiliar?
Sure. They've been around a long time. This is a company that's been kind of a leader. So it's cardiac monitoring, which obviously, heart issues is a major deal anywhere in the world, especially with so many, diabetics and people overweight. But it's AI powered cardiac monitoring, and they're the number one leader in wearable devices right now. So I love the fact that, they're old school, but also they're melding the AI and the wearable aspect of it. I think wearables, it was kind of wearables, Lou, I guess a couple of years ago, it was kind of a hot topic for stocks and it kind of went away.
Yeah.
I think it's still there. And I think it's going to be there. And the monitoring that we're going to have between our phones and whatever, or the Oura Ring or our watch, whatever we're wearing, is just breaking through now. It will be something that's going to be common for all of us to be wearing something in 5 to 10 years, I believe. And this being one of the early leaders, I think you want to go with that.
Yeah, I agree. I think actually they probably could be the natural acquirer for Heartbeam, and the ticker's Beat. They have a credit card sized device that does basically synthesizes a 12 lead, but they have a patent on a patch so that you could just wear a patch that would be equivalent. So it's a wearable that would fit right into iRhythm's business model. So I love the business model. I love the space. You brought it up. I got to get one more out of you. You talked about being health conscious. You love Viking Therapeutics. It's a best in class GLP-1, right? Like it's got to be the belle of the ball for either Novo or Eli Lilly to acquire. What do you like about it in particular?
I cannot believe they've not been acquired yet. So which scares me and tells me maybe I'm wrong. Because sometimes, the one thing you want to do is fall in love with the stock. And I would say I fell in love with this stock, but we've made some money and options with it in the past. We're down in a position that we have right now. I still like it because if you look at the numbers, the studies are much shorter than a lot of the bigger companies that have been doing it a little bit longer, but the weight loss percentage is often the same or even better.
Yeah.
But and as far as safety concerns, not much as far as safety concerns. And they're working on both in injection, which obviously they'd be behind the big guys, but they're also working on a pill. So oral would be huge for them as well. So and again, there's gonna be so many winners in this Lou. And again, this is an example of a trend that turns into a mega trend, and we get ahead of ourselves and they go up and then people forget about it. But while those 2 years is going sideways right now, the GLP stocks, they're getting ready to take off again. And I think this would be one of them. And I would be flabbergasted if they're not acquired this year. I mean, if I was a big name, I would absolutely acquire them at this price.
No, I agree. Look, I've argued like scientifically pipeline strength, Eli Lilly's ahead because they have retatrutide that's in the pipeline for it targets 3 targets, but Novo Nordisk is like the value stock that everyone loves right now. And I think Novo has to acquire Viking to get back into the game competing against the Eli Lillys of the world. So super supportive of that one as well. I personally own Viking. Want to make sure we end with where people can find you, right? And just so you got a 30-second, 60-second elevator pitch. Tell us what NextWave Research is all about, and then we'll put up on the screen a QR code and where people can find you.
Sure. First of all, thanks a lot for having me on. Great to see you. Great to be on here. Great show. Big fan. NextWave Research is kind of the culmination of what I've been doing my whole life, 25 years in this industry. I've managed money for 17 years, owned a broker dealer, had a crowdfunding company. I was on TV for 10 years. I had newsletter companies, sold everything over those years. Launched NextWave Research a few months ago, kind of taking the best of the employees that work for me, coming together, offering research for the average investor out there that wants to get through the fluff. The unfortunate thing about having access to information is there's too much information and too much bullshit out there that we have to get through that and really have some skin in the game. People that have managed money like you and I that talk to these CEOs that do deep dive research. And I want to make it accessible to everybody to get in there to buy stocks, and they don't have to just go buy the S&P 500.
Yeah, no, I love it. Look, we're very simpatico in that you do the due diligence, you get the rewards if you make the time and the effort. If you don't have the time and effort, Matt is a great way to short circuit that for you so you get just the insights. Listen, man, I will buy you a drink once this sun goes down. Where can I look? Yeah, Alexander Castro, we just put the QR code on the screen. You can go to NextWave Research or find Matt on X at Matthew McCall. We'll tweet out this episode once we're done. Great topics. Matt, are you a buyer of BMNR or Coinbase at these levels? Interesting question. You're not getting out of the hot seat yet. Our listeners are making sure we get a little bit more.
Not BMNR, only because I've tried to do my research on it and I still don't. I can't put the correct valuation on it. I don't know. Again, and I'm so exposed to Bitcoin, it's absolutely nuts. So I'm fine not doing that. Coinbase, I do like. I was looking at it today, but I will tell you, instead of Coinbase, what I have on my list right now are two other stocks: Robinhood, which got crushed today, and Interactive Brokers. Interactive Brokers was actually
Interesting.
up today, and this is a major player in the prediction markets as well. So this is another way to play it. Interactive Brokers is the safest way to play this.
Interesting. I like that take because Hood has got the most user-friendly platform. Interactive Brokers, I'd argue, is the least user-friendly, but they have the
horrible.
most access. They have the most access. It's the worst. All right. What about Chad Towers? If you haven't figured out, is our super loyal fan, and he's never shy on questions and insights. So last one before we let you go. Any thoughts on Oracle or Snowflake in terms of AI plays?
Sure. Oracle, obviously a huge pullback. I think the AI hype was a little bit too much there. We're up to almost 350 a share, down to 160 now. Probably not a bad long-term buy down here. Snowflake, I really like. I would rather own Snowflake going forward from here. And if you look at the charts, the 190 area, close at 191 and change today, is extremely important. If it builds a base at 190, just like it did in August, I think you have a great buying opportunity here. I wouldn't jump in right yet because closed near low today, last 3 sessions. But I do like both long-term. I definitely lean towards Snow.
Not too bad off the cuff, my friend. I appreciate it. You are a seasoned pro. You've handled it all. I appreciate you joining the show, and let's do this again before too long. We don't have to be in Nicaragua at the same time next time.
Sounds good, buddy. Thank you so much, and congrats on the show and everything you're doing. And let's grab that happy hour drink soon.
All right, brother. See you in the poolside in about an hour here. All right, folks, we are coming back shortly after a break. But before we do, make sure you follow us on X. As I said, we share throughout the week insights, investment ideas, as well as just some hot takes. We want you to make sure you follow us there so you don't miss an episode. Follow us on YouTube, follow us on X. We haven't branched out to any other socials yet, but we will. There's people that think we should, so we'll give it a try. With that being said, we'll be right back with some more insights and information and some meme coin crap that we've turned into gold, hopefully. So stay with us.
Let's bring in Lou Basenese. He's Executive Vice President of Market Strategy at Prairie Operating Co. and a Fox News contributor, and it's great to have you.
Good to be
President Trump didn't like this decision. He put this on Truth. Jerome, too late, Powell again refused to cut interest rates, even though he has absolutely no reason to keep them so high. He is hurting our country and its national security. Powell sees it differently. How do you?
Yeah, amen to the president's remarks, because I think Powell here, this was no surprise that he didn't cut rates. This is political theater. He is trying to maintain the appearance of independence, even though the data suggests he should have cut. If you look at small businesses and job growth there, they're really struggling. So he mentioned that the job market's stabilizing, but not for the engine of economic growth in the United States, and that's small businesses. So,
you said two or three more cuts this year?
Yeah, I think we definitely get 2 to 3 more.
And we're waiting on a Fed chair, and you're saying that the Fed chair's not in charge. You're making the case that Trump's in charge.
I think President Trump has the power here, right? Because the markets want to know what the expectations, the trajectory of rates are going. And all the candidates that the president is supposedly considering are going to be much more dovish and in favor of lowering rates, to put it in simple terms. So what does this all mean for everyday Americans, right? I mean, you're going to feel the squeeze a little bit longer, right? Interest rates are going to be higher on credit cards, on home mortgages, on auto loans, but relief should be coming in the back half of the year.
All right, we're back on the Big Skinny live from Nicaragua, where, folks, stranger things have happened, not just us broadcasting from Nicaragua. I do have a connection here. I've been coming here for over 15 years. I'm on the board of a medical clinic that serves a local community. But I got to tell you, the stranger thing that happened was last week live on the Big Skinny. And we're going to bring in my partner in crime here, the Dodd man, to reminisce about this, because it was probably the weirdest thing we've ever had happen on a live stream show, 35 episodes in and counting. So Dodd man, are you the storyteller, or should I tell the story?
Bro, you're the storyteller. Of course, you're always a storyteller. But yeah, it was pretty crazy last week. You have to, anybody who didn't see it has to go back and kind of see how all this developed. But
yeah, so we were live, and someone throws up in the comments, "You should start a meme coin, Lou." And I'm like, I kind of laughed it off, like, that's the dumbest idea I've ever heard, because we did a game called Crypto or Crap, and most meme coins are crap. And lo and behold,
greatest game ever. Come on. It was great. You love it. You know it.
And then lo and behold, not even 60 seconds later, 90 seconds later, someone created a Lou coin. Lou to the moon. So they created this meme coin, which then we had to figure out after the fact, like, what the hell do we do with this thing? They set it up in a way that I, as long as I logged in with my Twitter account, would gain all the fees and the royalties from trading activity in it. So, you've put together some great designs. LuCoin, it's the community token. And we've figured it out. Within 24 hours, we figured out how this weird world of meme coins and cryptos works. There's a lot of different on-ramps and apps and ways to facilitate the transaction, which we can get into another episode of how much friction still is involved, unless you're dealing in the major like Bitcoin, Ethereum, and Solana's. But then we tried to turn it into a mission coin, right? We said, hey, we're coming down here. I'm on the board of a medical clinic. We're generating fees. I donated the first $4,000 that came in fees, and within a matter of hours to the clinic. And now we've set out to say, like, let's turn this into a mission. If we can get LuCoin to the moon, it's going to generate fees for the clinic. But then let's use those fees as well, and just to donate to the clinic, but to build an app that's very affordable, that can get out awareness in the local community here for the clinic. So let's take a small percentage. Now that you can vibe code and use Claude and all these other AI systems to develop your own apps, let's do that affordably, but in a very intentional way to build awareness in the local community for what's going on here. So you got a holder here of our coin. Hope you take it to the next level for the charity of choice. Look, we have a very specific charity that the project that we're funding here is to just increase the viability of this charity. It's the Roberto Clemente Health Clinic. If you're a longtime listener, you've heard me talk about it before. If you know nothing about it, we're essentially here in the epicenter of this charity's operations. They serve about 40,000 people here in the local area that don't have access to medical care within 40 to 50 minutes from here. So the closest place for them to get medical care is Rivas, closest hospital. If they have an emergency in the middle of the night, obviously you need medical care before you can get 40 to 50 minutes away. The Roberto Clemente Health Clinic has 2 ambulances that provides 24/7 care. And then basically what we were used to in the US is an urgent care center. I mean, the things that they do, treating over 500 patients a year, and reaching thousands in the community with wellness and information programs with just this small, essentially couple room building is amazing. So, Dodd, you're seeing it here for the first time yourself. Any thoughts? Any thoughts on what happened with the meme coin?
Yeah, well, first of all, I want to point out that you figured it out, because I jumped in with you to try to figure it out, and the friction that it caused for me, it definitely stopped me in my tracks. That's a whole nother subject. But yes, we figured that out. You figured that out, and it's great. But more importantly, the clinic, being here and being on the ground and seeing the clinic, what you just described, what they do is nothing short of amazing. Being able to service the great people here of Nicaragua that quickly, and the amount of families that it impacts, it really is something special. And I'm fortunate enough to be here to see it, and hopefully, we can do whatever we can do to help with this coin, just to help these folks. It would be awesome.
Yeah. So listen, we're trying to turn a meme coin into a mission coin, at least just to raise awareness for the clinic. If you are a meme coin trader or buyer, we're going to be out doing some more promotions, marketing to get interest in this coin out there. If you have no clue how any of this works, that's all right. You can still help us with our mission here by going to the nicaclinic.org. You can see the performance is extremely volatile here. So this is the market cap of the Basenese LuCoin community token. It started at about a $4,000 market cap, has gone as high as about 35,000, and everything in between with regularity. But we're going to do our best to come up with specific development activities and marketing that stabilizes this and then sends it to the moon, hopefully over time. But look, if none of that interests you, you can scan that QR code that was on the screen before, or go to nicaclinic.org and just make a donation, or at least just check out what we're doing. More than anything, I think awareness leads to action, in whatever forms. If you're a medical professional and can volunteer your time, they do need dental care here as well. If you have students, if you have grandkids or children that are pursuing medical careers, they can come down here and volunteer and get hands-on practical experience in an urgent and medical care setting. So I just encourage you. We're going to turn something that seemed crazy and outlandish into something that does good for others. We hope that you join that mission. So we're going to pivot from meme coins to legitimate coins, because I don't know that many people are aware of what we've been up to with the upside. Dodd, why don't you tell your opinion? Like, what have we been doing? If someone asks you, what's the upside all about?
The upside, we've been working with some great companies that, getting the word out about what they're offering and their great information, and putting a professional package together, to really tell the story. And Mr. Basenese here is a great storyteller, of course, and talks to CEOs and pulls the best out of them. So I guess the first company, Hyperion DeFi, is
Look,
one of those companies.
Yeah, we're trying to connect here, as Matt said it earlier, is most times you don't get access or don't have the time to get access to the CEO. So we're trying to bring it to our audience members. Hey, if you could have 30 minutes with a CEO, a really compelling opportunity, what would you ask them? We ask those questions. We're talking about crypto. The hyperliquid coin is actually an alternative blockchain to Bitcoin that is really generates revenue on its own. So we had an interview with Nxt Jung, who is the founder, just a very sharp, way sharper than I was at his age. He's about 15 years younger, tremendous experience early on in the crypto days. And he saw an opportunity that he phrased up as basically like seeing NVIDIA or Tesla early. So let's play that clip where you can get a flavor for the conversations we're having with companies and CEOs like Nxt Jung. And we also pick CEOs that have really hard names to pronounce. We'll talk about the next one after we share some insights from Hyperion.
Nxt is not the hardest.
Yeah, it's not.
Palantir, Tesla, really historic runs, Ethereum and Bitcoin, right? So we believe that Hyperliquid is the next opportunity that fits in those verticals because we think it's globally accessible, next generation infrastructure. But more importantly, it's hard for investors to do a concentrated bet or build a portfolio around different ecosystems. Hyperion DeFi solves all of that because we represent and get exposure to all of the valuable components of Hyperliquid, including markets, deployment of assets to institutional clients, Hyper EVM protocols, and of course, the growth of Hyperliquid itself. And so it's a comprehensive all-in-one package.
I just get hyped listening to our music, right? I mean, these great opportunity. He puts it in plain English here. The other thing that we should bring out, like here's the QR code. You can go check it out on our YouTube channel. If you're not a subscriber there already, you'll see the other upside interviews with companies like Actuate Therapeutics, Neonc Technologies, Gain Therapeutics, leaders in the biotech space that are really uncovering drugs that are saving and curing rare diseases, or at least extending life. But then we have technology names like TerraWolf and Hyperion. So a plethora of direct access to CEOs. And then I think what's interesting here, we're talking about Bitcoin crash, but Hyperion is based upon the Hyperliquid token, which is doing really well in recent times. We've got a chart that we can bring up on the screen that shows that in the last month in January, I mean, we've seen a resurgence in the Hyperliquid coin, which I think really dovetails into the investment case for Hyperion DeFi. So I encourage everyone to check out that episode of The Upside and then stay tuned because last week we got a newly IPO'd company that's doing probably the most compelling stuff that I've seen in the VR space. And I know your son's a gamer, my son's a gamer. Man, we'd be the best dads ever. Dad of the year if we bring one of these devices home. So let's show it to you. And again,
this is in a whole world of its own.
A must buy for those wanting true VR gaming immersion.
Here's how a nerd in his 30s gets some cardio.
It was definitely one of the most fun workouts I have ever had.
Wherever you look, whatever you touch, you will immediately be impressed by the quality.
So it's a VR system, Virtuix, that actually, it's like a treadmill, right? It's a 360-degree treadmill. You can run and move in motion. He said one guy bought one of these units. They're sold for consumer and defense applications and lost 40 pounds in 2 months because he was gaming so much. So,
you worked the deal to get one of those, right?
Yeah, I'm working on it still. I'm working it. But like
this, you're eating so many cookies here on this trip to Nicaragua, I think, brother. I think you might need one of those like pretty quickly.
Yeah, my wife will totally agree. She knows exactly. I cannot say no to chocolate chip cookies. So I'm screwed there. But
and the good thing is that system, it fits in the corner of your room. So that's the thing that and the price point, I really do think it's something that is attainable, definitely in the VR space, for retail investor or just actual consumers. But then on the other side, there's obviously the defense and enterprise, applications to it that just, make it.
Yeah. Yeah, and look, you said it right. If it's in the corner, it's collapsible. It's mobile. It only takes up 4 square feet. This is really playing into. I always laughed at the moniker of esports. Right? There's nothing athletic about sitting around with a joystick. Now I need to be correct. I stand to be corrected. If you're running on a treadmill, moving in directions, like this turns into a true sport. So that episode is dropping in the next 24 to 48 hours with the CEO that I got to say has the hardest last name, John.
All right, here you go.
Yeah, Jan Gugulik. He said to pronounce it like good luck. It's Belgian. Yeah, I screwed it up royally, but the insights in those interviews, the company's newly traded VTIX, Virtuix, rallied out of the gate and set a market cap above north of $2.5 billion. It's pulled back tremendously, but there's a company that could be doing they have the capacity to do over $100 million a year in annual revenue with the manufacturing base that they have in place. So could be one of 2026's biggest standout performers. Be sure you're a subscriber to our YouTube channel so you don't miss when we drop that interview with the CEO of Virtuix, Jan G. I'm going to leave it with Jan G. And then subscribe to our YouTube channel, scan the QR code on the screen. You won't miss when that interview hits. We're going to take a quick break before we come back with one of our favorite segments, Headlines and Head Scratchers, where we put into context some of the headlines and charts and what it means for your investments moving forward in the week ahead. We'll be right back.
Contributor and energy extraordinaire, energy expert, Lou,
sitting next to the other one, too.
Yeah. Your thoughts?
Listen, I think we've been fossil fooled for far too long. The previous administration was all about an energy transition, and we saw evidence along the way that that would never work out. I mean, you go back to Texas when they had 40 to 41% of their electricity generated by renewables, and that grid failed. Ironically enough, Energy Secretary Rick Perry, right, former governor, was the one that put the policies in place that allowed renewables to come online, but not to that degree. They're good to have as an addition, as supplementary power demand, but they're not for baseload power. And we're seeing that now, right? This natural gas spike is not just a one-time weather event. It's because of a supply constraint that we have here. We haven't built enough pipelines. Right. We haven't set up the infrastructure to enable to have baseload power reliably all the time, which is what we need. It's an energy addition, all forms of power, not subtraction.
All right, this is usually the part of the show where I get 4 out of 5 right. I remember what we're talking about, and the Dodd man has to remind me, but I'm going 5 for 5 on this sunset-filled day. What do we got coming out of the gates, my friend?
Well, the first one is Never Apple, and I think this guy is clearly not an Apple fanboy like you. I think his take on the Apple reporting this week was a little bit more on the negative side.
Yeah, Mark Gurman, I mean, this is right. This headline rains on Apple's blowout results. I mean, Apple torched expectations. Everyone said the iPhone was dead. You better innovate or die. And lo and behold, the best quarter ever for iPhone sales, particularly because of China, an increase in sales in China. I mean, I've had this debate for now years. I mean, starting in 2014. I mean, it's a decade plus, where Bert Doman called me brain dead if I thought that Apple was a no-brainer buy. At that time, it was trading at about $40 split-adjusted price. So, Bert, if you're still around, who looks like a brain dead guy now, not me. Look, I think it's Apple's a ride or die tech stock. This is my investment thesis that usually pisses everyone off, as I say. Apple doesn't need to innovate anymore. They just have to iterate. They have 2.5 billion devices in their ecosystem. If they just roll out an incremental service that they charge a little bit more for, or another product offering, subscription, whatever it may be, or earn a little bit more from apps, it adds up across 2.5 billion devices. I mean, Dot, you have 4 children, all teenagers and above. How many Apple devices, if you had to count on your fingers and toes, you own amongst your family, the 6 members of your family?
First of all, I don't think I could actually add those all up, but probably 14, something sick like that. Probably more than that. Yes. And the question here, I have a question for you based on this is, Apple's relying a lot on external AI tech with like Google and Anthropic. How does that affect them? Because I know that there's been problems with, their Siri AI rollout and things like that, or their integration. So what's your take on that? Is that going to affect their profitability in the future or no?
I don't think so at all. And this is a contrarian take, right? So everyone's been dogging Apple. You don't have good AI. Siri sucks. And then they got mad at them because they partnered with Gemini and Alphabet to roll out an improved Siri. I think it's the smartest move possible. And it's Apple sticking true to its roots. Apple is not known necessarily for being a technological innovator. What they are known for is making it consumer friendly, right? So they go out and they package together the best hardware, software, technologies to have the best user experience. They've done it from their, Gorilla Glass screens early on to their biometric fingerprint readers. I mean, the list goes on and on to their mobile Wi-Fi modem chips that were embedded in it. Apple doesn't invent those core technologies that enable the product. They just build the product that brings it together. And I think that makes sense. Why does Apple need to be on the bleeding edge of AI when they're just connecting consumers, right? Like they're not trying to figure out drug discovery. Let the chip makers of the world, the NVIDIAs, tackle those really challenging problems that only Apple for consumer applications requires 20% of that type of technology to make theirs work. So just outsource it when you don't have to, and then just make the best package. That's my philosophy. So
do what you're great at and don't try to be great at everything is basically what you're saying there. In short.
Yeah, and then and look.
And what about this? I've heard Apple Car. Like, is that something that's actually you think is going to happen?
No, that got mothballed a long time ago. So CarPlay is their entrance. Like, just build the ecosystem that plugs into every car. Don't develop your own car. I mean, a car business, if Tesla's taught us anything, is a car business sucks. It's got terrible margins. You have to have much bigger aspirations if you're going to turn a car business into a profitable enterprise for shareholders. So, Matt mentioned earlier he loves Tesla. I hate Tesla because I think it's overvalued based upon how many cars they sell. But people are buying into the hopium of Elon Musk, which I get. That's fine. I would say we talked about in our predictions issue that on our bingo card is the SpaceX IPO. It looks like now I would not be surprised if SpaceX merges with Tesla as an easier path to get public and really juice the market cap of that company.
Is that a prediction, or is that just we're not making any solid predictions here?
Yeah, I'll put that on the prediction. I mean, look, prediction markets are booming. Why can't we just add one more of the 40,000 new predictions that come on every month? So,
we might have to update our bingo card there.
Yeah. Put it on Polymarket or Crawlsheet. I say that, there's a merger coming for the SpaceX IPO into Tesla. So you heard it here first. Estimate issues. Here's one that probably
AI growth is the people are underestimating how much it's actually growing. Is that what's going on here?
Dead on. We always try to be data driven here. So if you look at the estimates, which are all the lines below the top one here, is basically over time what everyone, the smarty pants, the genius, the nerds, the numbers crunchers that aren't inside building the actual companies said this is where spending is going to be on AI, capital expenditures, and they've been wrong every step of the way. The big five, they're basically they're closed capex. It's money they've spent is just eclipsed what the estimates are, and it keeps going up. I mean, Meta comes out, reports results last week, and says we're going to keep spending money. Oracle, whether they're financing it with cash flows or debt, people are taking them out to the woodshed because they're doing it with debt. It's still spending. They're building. Like the boom is here. It's not going away anytime soon. So keep paying attention to this, because this is, I always say, watch what they do, not what they say, right? Don't watch what the analysts say. Watch what the companies are doing. They're spending their money. I mean, if you want to know what you care about, go look at your checking account and see where you put your money each month. Those are the things you care about. These are companies that are spending 60 to 70 to 80% of their cash flows on AI build out. That means they believe there's a huge future there and a lot of business coming. Don't bet against them, is my opinion.
So with this underestimate, do you think that, the market's not fully, recognizing the AI revenue and earnings you currently?
No, they're not. No, like if you look at OpenAI, they just raised for ChatGPT, their revenue projections well ahead what anyone thought they were doing. The early, dig against these AI companies is they weren't scaling revenue. That's happening. They'll figure out profitability. In the early days of a huge tech boom, you're not worried about margins. You're worried about scale, and then you back into the higher margins. So I think that's the phase we're in right now.
And do you think the best plays still maybe are AI energy and infrastructure and hardware, like the pick and shovel plays?
Yeah, still picking shovel. I think solution providers, Matt loved iRhythm. I love Heartbeat. I love other companies that are using AI to leverage drug development, like Gain Therapeutics. Exozymes is another company that we interviewed that's using AI to produce natural products through synthetic biology. I just think there's so many applications that we haven't even thought of yet. They're going to come to the fore in the next, call it 6 to 12 months. I mean, look, in the last month, we've had AI starting to code for AI, right? Like now you've gotten rid of complete coders. So the latest edition of Claude coded itself in a week and a half. So
that's just scary. I don't understand how.
Yeah, hey, by this time next year, the big skinny could be running on its own as an AI agent that pretends to be Lou Basenese that impersonates you and me. So who knows?
Maybe that'd be exciting, man. I don't know, but also scary.
Yeah, this next one's right in your wheelhouse, man, because you got to.
Why is this one in my wheelhouse? Just because it's what we're talking about, minivans and how minivans, all of a sudden they're up, like sales are up 21%. Why is a minivan? Why is that related to me?
Because a man with 4 kids, is no way has he avoided the being a minivan owner. In fact, I found out you had 2. I am in the never van camp. I can never own a minivan. I will not.
First of all, sir, you have 4 children. Just because you've never owned a minivan, but yeah, I've had 2. So what's your point?
No, I think this headline's interesting to me, right? Because of the next thing we're gonna bring up, but is like there's this whole affordability buzzword that's in the news, right? And the K-shaped economy, and that there's 2 Americas, and this is indicative. I just think it's preferences, right? So we've never been at a time where Americans have owned more assets, and yes, there is definitely a bifurcation between the have and the have-nots. But we showed it on last week's show. The bottom 50%, anyone that owns assets has been narrowing that gap. So this headline, I think, is misleading. I think it's built to play into that. American dream's dead. I can't buy a home. The average, the average age of a home buyer these days is 38. I can't afford a really nice fancy car. I got to buy a minivan. Like they're becoming. I just think it's like. Certain cars become popular with certain segments of the population. Gen Z, like the new families, they love minivans. I mean, they're functional. I've seen. Like, I just can't do it.
Yeah, I mean, I think as a new family, a minivan's cool. It's like the white picket fence. It's almost like a badge.
No one ever. Said no one ever.
No, but seriously,
minivan's
like
not cool.
No, yes, not to say no one ever, but like as a new family, when you're growing a family, that it's almost like the cool thing to do. But when and this is I'd say my story, but like as you get a little older and the kids grow up a little bit more, you want to kind of shed that minivan. All of a sudden, you don't want to be the soccer mom or the soccer dad that's you got to trade that van in for an SUV because you need to be able to, jump the curb at soccer and get to that parking spot that the van can't get to, because that's cooler, but then, you fast forward a little bit, every vacation we take now as a family, of 6, it's either obviously it's a huge SUV, that fits 6 or 7 people because you have a lot of luggage, you have all that stuff. But no, minivan actually, offers better car mileage, better gas for it, and it fits everything in there. So like I can see, the evolution of, hey, it's cool. No, it's not. Yeah, it's cool again. So, I think that's that might be what we're talking about here. And what I think you just said, even though you've never owned one or wouldn't like one because you're just too cool.
It's different strokes for different folks. I can't ever get in a minivan, folks. Don't donate me one. I'll donate to someone else. I don't want it. I can't have it. It's like what are you allergic to? Minivans. That's what I'm allergic to. So moving on, because this is the bigger point.
I think we might have to have a whole episode where you might be laid out on a couch and we're going to have a discussion about your minivan problem.
Could be an insecurity, but I'm not evaluating that right now. Asset check, right? Here's what I think is most interesting in these conversations now that are happening, and we're up to the wire here. Everyone's talking about the consumers on the precipice of default. They got too much spending, not enough income. But here's the funny thing: look, from 2009 on, the rate of asset growth has dramatically, household asset wealth accumulation has dramatically exceeded the rate of liabilities, right? So the growth in liabilities. And if you look at this, right, the headlines always bemoan that credit card balances absolute are over $1.1 trillion. Now it's $1.2 trillion. But as a percentage of household wealth, they're not at record highs. So yes, the dollar terms might be at records in terms of the fiscal health of the country. The government's in shambles. They can't really figure out how to balance any budgets. But individual Americans are in a better spot than most people believe, which is why I think people keep getting surprised when consumer spending doesn't slow down, right? Like quarter after quarter, month after month, consumer spending is very, very resilient. For me, that's the bellwether. This economy is driven by consumers and small business. So all that to say, the bigger point here is don't be afraid of the consumer. The consumer is not overstrapped to a point where this thing's going to be on a great financial crisis 2.0 where things roll over in 2026.
But are households in a better financial shape, or is it, kind of like assets like real estate, just, prices going up inflated that kind of separates them?
Well, I mean, it's a more complicated thing when you dive into the numbers. Yes, real wages are growing in the last year under President Trump, where they were declining because of inflation and that impact. Yeah, it depends on whether you own assets or not, right? So that's why I think, and we shared it in the clip. I love Trump accounts because it just starts people early. When you start in finance, the biggest thing is not what you invest in, not how much you invest. It's just that you start early. So again, own assets in some way, somehow. If you're listening to us, you've never bought a stock before, just start somewhere. Start with something. It's a way to get going. But don't start necessarily with these crazy ETFs. And that's the last point before we sign off from Nicaragua here, 5 minutes after the hours. We've seen an ETF overload. I mean, there is now more ETFs trading than publicly available stocks. If you just look at active ETFs, and ones, the orange are the ones that are based on short-term trading, like super risky, leverage 2 times, 3 times ETFs. The others are just, different strategies. I think ETFs, the right one at the right time makes sense, but there are way too many choices. We're going to do our part. So this is also a tease. If there's a problem in the market, there's too many ETFs, we want to be part of the solution. How do we feature ETFs that offer a unique solution that actually is a value add? We're going to start reaching out and hopefully interviewing some of those innovators and leaders behind those ETFs and bringing them here to everyone on the Big Skinny.
I feel like we're in the SPAC boom of 2020 and 21, with all these ETFs.
Yeah. Who would have thought in 2020, 2021, you would be opining about the SPAC boom, my friend? So see, old dogs can learn new tricks. Boys come a long way. Folks, we've come a long way. 36 episodes in just under a year. We're coming up on our 1-year anniversary. We want to thank you for joining us all along the way, whether you just joined us now or you've been with us from the very start, Mr. Chad Towers. We're thankful for your patronage, your loyalty, your support. You're chiming in, and we'll be back, same channel, different locale, next Monday, 5 p.m. Eastern. Cheers to you, my friend, even though you're right across the room from me.
See you, Lil.